Good afternoon, Maverick Traders. It's the Market Roundup. Joe with you here. It's the 16th of May. It's Monday. I'm not privy to Mondays. I usually do these Thursdays, but I'll do my best because I usually have a couple of days of market action to make an assumption, but I'll see what we got. This is my opinion, by the way. Take responsibility for the outcome of whatever you decide to follow along with this. So let's get into a market analysis because I think the markets, or I'm seeing that the markets are a little bit more weak than I thought they would be based on Thursday and Friday's action. Corey and Darren were talking about it on Sunday that we would get a +2 move or a pretty good surge to the upside, especially after what we saw Thursday with the gap up Friday and the close towards the high. And I agree 100%. I believe that we were going to push the 420 mark on the SPY, and the 20-day moving average of the market's just kind of stalled out. Now, being honest, there is not a lot of news to keep these markets moving higher. It's actually pretty ominous. Take a look at what the Dow, the S&P, and the Nasdaq did. The Nasdaq was down just over 1%. The S&P down 0.39, and the Dow actually holding on to gains. Understand, folks, that last 30 minutes of the day, the markets turned south pretty quick. It's not like it was a massive sell-off, but they did bleed lower into the close. So for them to close where they're at was almost pretty optimistic. Oil up, gold up slightly. The advanced decline line didn't change much, and the above and below the 50-day moving average, not a lot of gains. It's just we're not going anywhere. And let's take a look at the SPY. What I mean by that is I was expecting a retest, the 410, the 20-day moving average, so on and so forth, folks. I'm really excited about the next bear rally because I've got a slew of bears that I need to bounce back, roll over, create the same pattern, confirm, and I'd like to short them another round. We just didn't get that. Now, I'm not abandoning anything. I was looking at some bulls I'd like to buy for the shorter term. Let me say this while I'm on that topic. For you traders that are out there that aren't very comfortable with any sort of short-term bull playing a rally based on kind of a counter-trend move, you don't have to. Keep that in mind. You can sit in cash because a lot of the bear trades that we've put on aren't participating in these moves to the upside. If so, it's volatile and then it turns right over and falls apart. And I'm talking about if you're playing the Googles and the Teslas and the Amazons. Yeah, then it's this, you're basically playing with just a schizophrenic psychopath, right? However, if you are predominantly long energy utilities and materials, a couple of, I've got Merck up here, so a couple of healthcare, the big caps, kind of the flight to safety stocks, you're doing pretty good. If you're staying primarily short communications, consumer cyclicals, and technology, some of those high flyers, you're still doing pretty cool. So you don't really need to, hey, I'm going to get bullish for a week and then stay bearish, and then bullish for a week and stay bearish. Just play whatever's comfortable. Remember, your own trading plan is the most important. There, now let me get off my soapbox and talk about the chart. So 410 was the retracement I'm looking for. I don't think that it's not going to get there. Today is a little bit more ominous than I thought it would be. However, it could be a breath, and we could see a short cover rally definitely over the next couple of days. Maybe a spark of good news. We do have retail sales. We got Powell talking tomorrow. There's enough out there to where we could get an inkling of hope, and these markets could shoot up and retest. But no matter what happens, I'll go on record, guys. 410, 420, it's still a bear rally. These are bear markets. They're bearish. There's plenty for these companies to give up. Please don't be suckered into, hey, Amazon's gone down 50% or 40% or when it does. And how much lower can it go? The answer is as low as it wants to. And Corey nailed it on Sunday saying that these markets will surprise you. If you think there's something that they can't or shouldn't do, they will. Folks, these CEOs launched themselves into space. There's plenty of money in these markets to come out. All right, fair enough, funny. Okay, let's move over to the Qs. This one was a little bit more ominous. Understand, it gave up quite a bit towards the end of the day. This is the one that's been beaten down the most, for sure. My opinion, there's still plenty of money in this to come out. But even a rally back up to that 320 level or the decreasing 20-day moving average, still bearish in my point. Here is the sector heat map. I expected this to be at least a mid shade of green because of Thursday and Friday's action of last week. I figure we get that surge with the lower volume. Now, we did get the lower volume, folks. We did. And the VIX did drop a little bit, which I thought it would, but it's a bull pullback in the VIX. However, it was just literally 3 days early in my outlook. Doesn't mean it can't push higher over the next day or so, but Hey, the markets do what they want to do. Where does that leave my outlook for today, folks? I am definitely still -3. I'm going to take that +2 that Darren and Corey had, which I believed 100% in, but I have the ability to see today, and I think it maybe is a +1. Maybe the markets just don't have it in it. Now, we have seen these markets rally many, many times. They did it in March. They did it the end of January. We've seen these markets rally all the time. This might be that time where it doesn't. Now, if it doesn't and everyone throws in the towel, then we could get the capitulation. Is it a capitulation week? I'll tell you in about 3 days. Other than that, let's just play what we got. That being said, folks, we got the potential trades here pretty much the same as we had on Wednesday and weeks past that. The bulls are still strong. Merck, strong. Energy, VLO. We've got utilities, energy. There's healthcare in there, super strong. On the weak side, it's the same stuff. Whatever starts to break down, seems like it can't stop. Now, Newmont, on the other hand, you think it'd be pretty strong because it's mining stock. But once these things roll over and start to sell off, that is where we can jump on board. The beautiful part about trading momentum and trading the markets in front of you is they stay in that direction. So keep that in mind. Let's jump into Merck. Merck was a bull last week. It's a bull today. It was a bull on Sunday. It still looks good. Beautiful confirmation. Moving to the upside. Diagonal spreads, vertical spreads, whatever you guys are comfortable with. OLN, basic materials, specialty chemicals. Beautiful confirmation that it had on Thursday, Friday. This one happened to almost follow through today. I don't think this is going to shoot the 70 mark anytime soon, but diagonal, it's still showing an uptrend. Take a look at everything else that's actually bounced here. It's usually below its 50 and 20-day moving average. Let's play the things that are showing some strength in the sectors that are still strong, right? Makes sense. Valero, energy, hey, if we're going to pay for it, we might as well put money into some of the stocks that are going to benefit from it. I do like I love the Doji Friday, and the confirmation on Thursday was, or excuse me, I got those backwards. Doji on Thursday, confirmation on Friday, but nice follow through today. If you want to be a little bit more reserved, thinking that this is going to maybe consolidate a little bit, or we do see retracement, wait for it to break above the 130. It's a pretty solid resistance. You can see it set it about a couple weeks ago, a week and a half ago. So if it could break above that, a nice diagonal spread, so on and so forth. On the bear side, these came from Wednesday's class. Yes, that's right, folks. Anybody that jumped into these last Wednesday are still doing really good. I understand the markets did close flat for the session, but this is rolling over. It's confirmed. I got a 46 breakdown for anybody who wants to get into it moving lower. It's just a nice trade. ETSY, this is another one. Confirmation of a bear rally, a very anemic one, 2 days. It was the Thursday, Friday that we saw the markets, but just below the 100, below the 20-day moving average. Confirmation to the downside. The volume was a little light. However, you don't have to play it directly down to 80 again or 60 or whatever your target is. You could play it diagonal, or you could do a credit spread. Hey, if this thing stays below $100, I can make a couple of bucks. Here is Wayfair, another consumer, and I just liked the size of the red candle in this. These are tough. I zoomed in on these. You could zoom in a little bit more because they're so volatile. Take a look at it, 11.37% for the day. This thing moves a lot. So if you guys want to play it, just make sure that you open it wide and are able to absorb that kind of volatility. So long story short, I mean, nothing's really changed. It's just how the market rallies, how the bear market or the bear rally happens. We expected it to follow through pretty aggressively based on Thursday and Friday. Well, we're wrong. Big deal. We're still in a bearish market. We're still in a bearish trend. The bearish stuff is still staying bear. The bullish is still staying bull. If you want to trade it a certain way, do it. But the momentum upward halted pretty hard today. We do have retail sales tomorrow. We got a Jerome Powell interview. Real quick, folks, I made mention of this Wednesday. Corey touched on it Sunday. When the Fed starts taking responsibility and gets blamed, and we did it too early or too late, in this case it was too late, this is where you're starting to see the reactions of a panicking market. When traders start to blame out sources is where you can see, okay, we might get this snowball effect. Until then, hey, we can spend as much money as we want, and the Fed can print it, and we'll just keep spending it. And then once it hits the fan, wait a minute. You did something wrong. So we're starting to see that. Keep that in mind. I always use that as a little inkling. There's my 2 cents. But we'll see where it goes. Earnings reports, not much. The stuff that's out there was super disappointing. and a little bit scary based on, you mean you can't quadruple your returns this quarter? Well, what's wrong with you? Realism is starting to set in. So I'm not really surprised that the markets reacted the way they would. I just thought momentum would at least take it deeper into the week. Now that can change tomorrow, just like anything. You guys know how these markets work. So stay safe, trade the markets in front of you, follow your plan, and we'll talk to you next time. Thanks for joining me, guys. Bye.